Election Day 2016 is finally here. We are seeing the major U.S. stock averages trade mostly range-bound, so here to talk about what we can expect in the aftermath of the election is Gregory Keating of James E. Coffey Securities. Greg, thank you so much for joining me today.
Oh, thank you for having me.
Well, we saw quite a rally in the equity markets yesterday, and we're here on Election Day, and we're seeing fairly range-bound trading. So, given that we have a lot of expectations on the market, what do you expect to see tomorrow?
Well, I think the market spoke yesterday on who they feel is or what they feel is going to be the result. Obviously, the previous 9 trading sessions from yesterday were down, but yesterday all but made that up and some. Obviously, with the headlines coming out that the FBI was not going to reopen an investigation into Mrs. Clinton. So I do feel that the market is expecting the Democratic nominee to win tonight. If we do see anything different than that, I think we will be in for a rocky ride tomorrow.
Well, hopefully it isn't a contested result, and hopefully we do get results out fairly quickly. But I do want to get your overall take on the Fed rate outlook. Now, we got the jobs report. Yesterday, we had Charles Evans speak earlier today, and he said he'd feel more comfortable with normalization if inflation were higher. But given that the Fed funds futures are pricing in a rate hike, where do you stand right now?
Well, I mean, obviously, with the last Fed meeting, they wouldn't want to rock the boat by making a move on the interest rates so close to the election. I think the jobs report that we got didn't knock it out of the park. Wasn't terrible. I think unemployment rate staying right at that 5%, 4.9% level. I really feel that December that the Fed is going to have to act and going to raise that quarter or target a quarter point rise.
And while we're on the topic of central banks as well as the global economy, we got mixed trade data out from China earlier today. And of course, we'll continue to pay attention to numbers. But I do want to get your take on earnings. Now, in terms of today's results, we saw a little bit of shakiness in the healthcare sector with CVS and Valeant. But overall, in this earnings season, were there any surprises for you?
I mean, I think all in all, as you mentioned, there was a couple of duds today, not to mention Hertz. But all in all, so far we've seen an earnings per share growth rate of above 2.5%, according to FactSet data research. And going into the earnings season, we expected that number to be negative. Right now, I think the focus is on the election. The market has been pretty range-bound since the end of the summer, focusing on that election. Once we get some clarity in terms of that, they'll be focusing, the market might get a bounce here saying, you know what, earnings have been pretty good. The Fed might raise, but all for good reasons that it might raise in December. So I think all in all, earnings have been good. In terms of a specific sector, I think right now might be a decent entry point into the financials. It's kind of followed the market up about 4% on the year. In particular, banks. If we get a rise in the interest rate in December, that could be a good place to put your money.
And last but not least, before I let you go, I do want to ask you about 2017. Once we get the Fed rate decision out of the way for December and the election, of course, what are the major event risks you're paying attention to heading into next year?
I mean, I think right off the bat, you have to look at GDP growth. We've seen the last couple of years, the first quarter GDP growth has been awful to quite awful. So I think if the Fed were to move, I think they're really going to take a good look at that first GDP data point that we get for the first quarter, and then that can really start to figure out what they're going to do in terms of their plan for the rest of the year next year.